Welcome to Moral Money, the podcast where we dive deep into the future of global economics, technology, and the evolving world of money. Why Bitcoin won't work for you, a deep dive into its fragility. The Bitcoin market over the past 15 years has garnered substantial attention, often depicted as the perfect hedge against a broken financial system. Evangelists like Michael Saylor preach the gospel of Bitcoin as the ultimate store of value, positioning it as digital gold in an age of crumbling fiat systems. While this narrative is compelling, especially given the legitimate criticisms of the current financial order, it falls short when scrutinized against Bitcoin's own history, market dynamics, and vulnerabilities. Let's break this down into three core arguments, followed by some key supporting conditions. 1. Bitcoin's wealth distribution problem. Bitcoin is often hailed as a tool of financial liberation, yet paradoxically, it has created vast inequalities within its ecosystem. Early adopters, especially those fortunate enough to hold significant amounts of BTC for years, have reaped the rewards. The stark reality: under 10,000 people own the majority of Bitcoin's wealth, and the vast majority of users have not seen those monumental gains. In fact, an estimated 800,000 users have incurred massive losses, with many losing upwards of $100,000. This inequality mirrors the very fiat system Bitcoin proponents seek to escape. It's a speculative game where the rich continue to get richer, and the average investor caught up in the hype often faces financial ruin. The decentralized utopia that Bitcoin promises isn't as accessible as it seems when power is concentrated in the hands of early adopters and market manipulators. Market manipulation and centralization. Bitcoin's value proposition hinges on the idea of decentralization, but the reality is more complex. Whales, those who hold large amounts of Bitcoin, exert an outsized influence on the market. This concentration of power allows them to manipulate prices, and it often results in rapid price spikes and crashes, leaving leveraged traders in ruin. Moreover, the market itself is propped up by centralized institutions. Exchanges, stablecoins like Tether, and large mining pools are far from decentralized. They play critical roles in determining Bitcoin's price, and their control mirrors the fiat financial system. Without continuous injections of fiat capital, Bitcoin would struggle to maintain its value. It is, in many ways, just another cog in the very system it claims to oppose. 3. Dependence on a broken fiat system. Bitcoin's reliance on fiat money undercuts its ability to disrupt the status quo. Despite its decentralized ethos, it still needs centralized fiat on-ramps and off-ramps. Whether you're trading Bitcoin on an exchange or mining it, you're interacting with traditional financial systems. This dependency ensures that Bitcoin never fully escapes the grasp of the very entities its proponents rally against. Furthermore, as central banks begin to explore and implement central bank digital currencies, CBDCs, the threat of regulatory crackdown looms larger than ever. If governments seize control of stablecoins or implement stringent regulations, Bitcoin's fragile ecosystem could crumble under the weight of centralized intervention. Price manipulation. Bitcoin's volatility is no secret. The market is vulnerable to price manipulation by large players and exchanges who profit from the liquidation of leveraged traders. Black swan events, where Bitcoin can drop 50% in a single day, are more frequent than most would like to admit. While Bitcoin's price may soar to new heights, it can just as easily plummet, leaving many investors in the dust. Unregulated exchanges and scams. The Bitcoin ecosystem is rife with scams, from ICO rug pulls to exchange hacks. Unregulated exchanges can shut down overnight, taking user funds with them. While Bitcoin itself may be secure, the infrastructure surrounding it is far from it. This lack of accountability has led to billions of dollars in losses and disillusionment among its user base. Moral ambiguity. Bitcoin is a neutral medium. It does not judge how your wealth was acquired, whether through moral or immoral means. It's used for everything from legitimate investments to hiding ill-gotten gains. The fact that Bitcoin doesn't discriminate between users is both its strength and its greatest moral failing. It serves those looking for a store of value just as easily as those looking to escape legal consequences. Its immutability is touted as an asset, yet it has been exploited repeatedly to shield bad actors from justice. Energy consumption and environmental impact. Bitcoin mining consumes a staggering amount of energy, often criticized for its environmental toll. The cost of securing the network in terms of electricity is immense and paid in fiat currency. The need to constantly feed Bitcoin's mining machines ensures that fiat money remains an intrinsic part of its system. Thus, Bitcoin is not the decentralized, self sufficient utopia it promises to be. A false sense of security. Bitcoin is often described as a safe haven, a place to escape the chaos of the current financial system. But the reality is far more complicated. While there are elements of decentralization, the infrastructure supporting Bitcoin is deeply reliant on centralized systems. Its price, propped up by speculative investment and manipulated by those who hold the most, creates a fragile and volatile market. The most critical flaw, however, is Bitcoin's dependence on fiat. Without continuous fiat injections and the support of centralized financial institutions, Bitcoin would struggle to maintain its current value. Its promise of financial freedom is undermined by the very system it claims to disrupt. The question you need to ask yourself is this: if the foundation of Bitcoin is built upon the fiat system it seeks to replace, can it ever truly succeed in its mission? Or is it just another layer of a fundamentally flawed economic design? I'm Steve, and today we're tackling one of the most critical questions of our time. Can the global economic model transition without collapse? And what role does Bitcoin play in this shift? Is it the escape hatch we're hoping for, or could it lead us into even more instability and chaos? In today's episode, we'll explore not just Bitcoin as a digital currency, but as a symbol of a broader movement, a shift away from centralized systems toward decentralized alternatives. We'll dig into the arguments made by Bitcoin maximalists, the challenges its volatility presents, and whether a more stable, real asset backed economic model might provide a better path forward. But this isn't just about money. This is about the very foundation of our society. What happens when the systems we've relied on for centuries, like central banks and traditional lending, start to unravel? How do we navigate a world where the old rules no longer apply? Stick with us as we explore these critical questions and their implications for the future. Let's begin with Bitcoin's role as an escape hatch. For many, Bitcoin represents freedom, a decentralized, inflation resistant store of value that promises an alternative to corrupt governments and failing fiat currencies. But is this promise too good to be true? Bitcoin's volatility is both its appeal and its greatest risk. Early adopters have made fortunes, but this same volatility can wipe out those gains overnight. Imagine Bitcoin hitting $5 million per coin, but the economy collapsing alongside it, civil unrest, mass shortages, and total societal breakdown. Bitcoin might be worth millions, but what good is it if there's nothing to buy or no stable society left to support it? And what about the inequality it could perpetuate? Those who got in early benefit the most, while the majority without resources or access are locked out. Could we be creating a new form of economic inequality where wealth is even more concentrated than before? These aren't hypothetical questions. If we rush headfirst into a Bitcoin dominated future without addressing its limitations, we might find ourselves trapped in a system where only the wealthy thrive and everyone else is left to fend for themselves. Segment 2: Bitcoin, the problem of lending. One of the most fundamental pillars of any economy is lending: how businesses grow, how people buy homes, and how entire economies expand. But Bitcoin introduces some major hurdles here. The first issue is volatility. If you take out a loan in Bitcoin, its value could double or halve overnight. Imagine buying a house today, but tomorrow you owe twice as much. This unpredictability makes long-term financial planning nearly impossible, and it's a far cry from the relatively stable, predictable systems we have with fiat currencies. Then there's the lack of regulation. Bitcoin is decentralized and unregulated, which means that if something goes wrong, there's no legal safety net, no governing body to turn to, no protections for borrowers or lenders. It's the Wild West of finance, and the risk falls hardest on those who can't afford to lose. In this environment, the wealthy will always have the upper hand. They can absorb the risks and play the system. Meanwhile, everyone else is left vulnerable to a currency that, for all its potential, lacks the safeguards we rely on in traditional economies. Segment 3, the property. And now let's turn to property investment, a pillar of economic stability in the traditional world. But in a Bitcoin based system, this too becomes risky. In a world where Bitcoin fluctuates dramatically, how do you price real estate? If you're paying a mortgage in Bitcoin, a sudden price drop could leave you underwater, unable to make payments. On the flip side, if Bitcoin's value skyrockets, homes could become prohibitively expensive, locking people out of the market entirely. Beyond just economics, there are social implications. Housing isn't just an investment, it's where families live and communities thrive. A volatile property market could deepen social inequality, turning homeownership into a privilege only the ultra wealthy can afford. So, while Bitcoin may hold promise as a currency, it's clear that its volatility poses serious challenges to real estate, arguably the most stable store of value throughout history. Let's look at the bet Bitcoin maximalists are making. There are three key parts to their gamble. First, they're betting that Bitcoin will continue to rise, potentially reaching $1 million or even $5 million per coin. They see Bitcoin as a hedge against inflation and believe it will outlast fiat currencies. But even if Bitcoin soars, there's no guarantee that the global economy can handle this shift without imploding. Second, they're betting that this transition won't trigger widespread chaos. But history tells us that economic upheaval often brings devastating consequences: famine, civil unrest, and societal breakdown. Betting on Bitcoin's rise is one thing, betting that society will smoothly transition is another. And third, they're betting that no better alternative will emerge. They're assuming Bitcoin will remain the dominant player, but what if a new, more ethical and stable form of money arises, perhaps backed by real assets like property? If that happens, Bitcoin could quickly lose its luster. It's a risky bet, one that could either pay off massively or leave millions in a worse position than they were before. And with Bitcoin evangelists like Robert Breedlove and others placing big bets on Bitcoin's success, we need to ask, is this a future we're ready for, or is there a better, more stable way forward? Thanks for tuning in to today's episode of Moral Money, where we explored the promises and pitfalls of Bitcoin as a potential lifeboat for our global economy. As we've seen, while Bitcoin holds great promise, it also carries significant risks, and the path forward might not be as clear as its most vocal proponents suggest. If you found this episode thought provoking, make sure to subscribe to the Moral Money podcast. We'll be diving deeper into the future of money, ethical investments, and new economic models in future episodes. Let's explore together how we can build a more just and sustainable economic system. Until next time.